Good morning, ladies and gentlemen, and welcome to the show on this Monday, 19th of July, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, here's what I want to say. Uh, well, let's get the charts open right here and take a look at what's going on. Uh, Here, Dow drops 500 points on fears of COVID rebound. Well, I've been forecasting this drop's gonna come now. I even had a show on there last night with a big red light on it. You know, um, I've been predicting it's going to come now for quite a few days, and I haven't been saying anything about a COVID rebound causing it. No, what I've been saying is they're draining liquidity out of the system, and I predicted this is coming. But it's like I got this feeling that this might not be the big one. The big one, this one, they might still pull out of this one because they haven't drained enough liquidity out of the system yet. And there's enough people out there that want to buy on the dip. There's still a little bit of liquidity out there. I just got the feeling we got to drain all of the liquidity out of the system before we really get the big one. There's still, they've drained, I think, through the reverse repo operation, they've drained something like, what was it, 850 billion? And soon it's going to be up to like over $1 trillion, probably next month, There's still quite a bit of stimulus money still going out, out the door. But there's something really big that I want to talk about on my Delta Report channel. I'm going to do a show on it just about, as soon as I'm done here, I'm going to record a show on my Delta Report channel. Something really big going on, really big, and the ramifications are huge if it continues. So I got to talk about it. It's very important. So I'll leave a link in the description, but let's move on. We got a 500-point drop in the Dow right now. And I was telling you guys it's red light. And basically what red light means is it means risk off. It means that they're draining liquidity out of the system. The deeper this cuts, I'm going to tell you guys what. The deeper this cuts, the Fed's got this. They got to have this. The deeper this cuts, the more it's going to bring inflation ultimately. Because what it does is it moves the Fed into action. The Fed did massive amounts of stimulus there, and we all know about it during the COVID crisis. And they got to a point where they were like, maybe we did a bit too much. We got inflation here. And now the central banks are starting to talk, we got to fight inflation. you know? And this is all part of the liquidity draining process and everything else that they're doing to keep inflation at bay at the same time. But you can't have your cake and eat it too. I'm sorry, you can't have your cake and eat it too. We're gonna have the inflation, and you just can't keep this bubble economy going and not have massive amounts of inflation start to come, and then people slowly start to lose confidence, and then ultimately in the end hyperinflation. You just can't have it. And what's the opposite side of that? What if you say, well, we can't have it? What are we gonna do? We're gonna let the system deflate? That'll tear the system to ribbons. Can't let that happen either. So there's a trap here, you know. You're going to have to. The system is unstable. It's not going to stay where it is right now. As this leverage builds, the system wants to break. It wants to deflate. That's what it wants to do. But at this point, there's so much leverage, it would deflate so big, so overwhelming that it would crush the system. Ever since 2008, that's the way it's been. What were they thinking, creating all these leveraged products, financial products, ultra leveraged financial products? They've created a system that can't be. It's completely unstable. Ultimately, it's going to crash either by deflation or by inflation. you know? And so that's where we're at with all of this, you know? And so we're seeing an unstable system. And what this is, what's happening today, this is what's called volatility in the markets. And massive volatility, of course, when you get a 500-point drop just like that, boom, that's massive volatility in the markets. So we take a look at gold and silver today. Silver's down 36 cents. But you see this when it dropped down here, you know, and then all of a sudden this little bounce right here. This is investors out there. You know, when the real trouble comes, you get a little kid. He goes, "Mommy, mommy!" He runs for his mommy. There's your investors right there. When this silver popped, look at gold. Gold popped even worse, you know. Take a look at the gold. See this gold popping right here? Popping up? That's all the investors go, "Mommy!" running for their mommy. "Mommy, mommy, mommy! The sky's falling!" You know? 1811 for gold today. Gold is the big thing, you know. It's really, gold is the only anchor. It's the anchor of the world's financial system. Yeah, that's what it is, gold. And nothing else, you know. Okay, let's take a look now at cryptocurrencies today. 1241 for cryptocurrencies. We're looking at Bitcoin at 30,663. It really doesn't want to drop below 30,000, but I'm going to tell you, if Bitcoin does drop into the 20s, you know, it could go all the way down to 20. You know, once it gets in the 20s, that's a big thing. It's a big head thing. That 30,000 for Bitcoin, but it's at 30,662 right now. It's down 3% on the day. Let's take a look at the Dow Jones today right now. I'm going to refresh the page and see where it's going. It's down 517, down 605. So the drop is continuing this morning. I'm wondering how deep this is going to go on this particular drop, because it's a little bit on the premature side of when I was expecting it to happen, you know. If it started to drop a little bit later this year, you know, right now there's still quite a little bit of money sloshing around the system. We might recover from this one. Is what I'm thinking though. You know, maybe. This might not be the big one. This might just be another tremor. We've had a couple tremors so far. This might be one more bigger tremor. You know, if it is a tremor, the tremors are getting bigger for the big one that's coming. Or this could be the big one, you know, but it depends on how far the Fed's willing to let her go. Let everything go. How far are they willing to let it go before they step in? If they step in quick, then the hyperinflation is further out in our future. That'll stem off inflation if they step in quick. If they let it go really deep and let us have massive deflation before they step in, you know, if they let the markets go down, say, 25% before they step in, that'll move us toward hyperinflation quicker. But you're not going to ever see one of these big 60% declines in the market because the system can't withstand it. And they'll have to step in before that happens. So if you get a lot of these guys out there saying, "Oh, we're in for a 40 to 60 or 80% decline in the markets, and we're in for deflation." No, it ain't going to happen, because that would lock up the system and everything would basically collapse, because we're in a debt-based system. And what that basically means is all your money, what you call money, which is actually currency, is created through debt. And if you let all of that extinguish, there is no money. It all just disappears. System locks up. Ice 9. It all turns to ice. It's like right now the system's water, liquidity, okay? It all becomes ice, and you can't work with ice. You can't exchange it. You can't do anything. The system just basically freezes. So they cannot let that happen. You know, it's probably a 25% drop is probably as big as they can take without all the financial institutions just going belly up. you know. And so they're not going to let it drop 40, 60, 80%. It ain't going to happen. And the deeper it goes, the more they're going to have to come in with more stimulus to keep all these bubbles popped up. Basically, what I'm telling you guys is they're going to keep the they're going to keep the everything bubble propped up to infinity and beyond. What's that going to do? What's going to break? Because, if you keep the everything bubble propped up forever, something's going to break. Yeah, something's going to break. It's the fiat currencies. It's the dollar and all the other fiat currencies. They're going to become worth zip. La, doodah. It's over. But, people keep using them right up until the very end. People keep using a dollar when it takes $1,000 to buy one apple. People will still be using the dollar. It's just that they'll be taking it'll be bigger, adding zeros to it. This happened before. It's happened many times through history. It's called hyperinflation, and it's coming. Okay, we're down 666 points on the Dow. 666 points down on the Dow. We're down right now. 666 points. Okay, let's move on. Let's take a look now at crude oil. It's down $2.68, or 3.73%. It's at $69.13 right now, so it's broken down below $70 for crude oil. Let's take a look at the MOVE index today, and we're seeing the MOVE index is dropping some. It's down 3.6%, or actually 3.6 points. It's down 5.85%. It's at 58.24. Let's take a look at bonds now. Bonds are big movers today. Where's my bonds? Here's my bonds right here. And we're looking at some substantial drops in yields. We're looking at a 10-year at 1.21. You remember not long ago it was up at 1.75. Now it's 1.21. They're buying heavily into these bonds today. Look, they're moving at 8 basis points on the long end. 30-year has moved down 8.8 basis points and 1.84. The bonds are rallying. They're buying into bonds heavy. That's a smart move, guys. You got a United States is like got all this massive debt, and then their unfunded liabilities is in the hundreds of trillions of dollars. If they were a corporation, they would be completely sunk. Except if they were a corporation, they'd have some sort of a printing press in the back room where they could counterfeit money. you know, I mean, but they're not a corporation. But if they were a corporation, what you're buying into is a bankrupt corporation. But they're buying. That's where they want to go. They want to buy in, and treasuries are going to be defaulted on. And there's two ways they can be defaulted on. One way is they just don't pay. Then the treasury's worth zero because it's been defaulted on. Or the other way they can default on it is they can make the dollars that the treasuries represent worthless. Either way, what do you think's going to happen? And who's buying into these things? You're only going to get a weaselly little 1.2% on the U.S. 10-year for investing your money for 10 years. And we know inflation's over 5% by the CPI's own register. That means you're losing, what is it, about 3.7% or something per year, or 3.8% per year. You're guaranteed loss on your money. Oh my goodness, this is so ridiculous. Let's take a look now at the market watch of the U.S. dollar index, 92.66. Started to fall right here. The dollar falls. If it falls enough, if it continues to fall, maybe it'll stem off this little market drop that we're having right now. Okay. We got a wild day out there, guys. in the markets. Basically, things are a little bit instability, but this might be just volatility. It might not be the crash. But it would be volatility caused by them draining off all that liquidity, and it's just making instability in the system because of the loss of 850 billion, or over $750 billion suddenly sucked out. Of a system that was awash in liquidity. Suddenly it's not awash in liquidity, and people start to question their choices in investments, and starts to become nervous, and you get volatility. That could be what's going on. So things might recover a little bit. Might not be the big one, but the big one, they're going to step in on the big one. You're going to know the big one because you're going to see the Fed step in. That's how you know the big one. When I keep saying this might not be the big one, is because the Fed might not have to step in on this one. It might recover on its own. The big one's not going to recover. There's going to be no recovery on its own. The Fed's going to have to come in and rescue them. They're going to be in free fall. When the big one hits, and I told you guys, I did a show on it. I'm expecting the big one to come within the next. It could come before the end of this year, but it could come in the first 6 months of next year. So I'm giving myself a bit of room there when the big one's going to come. But how you know the big one is the Fed's going to have to step in to stop it. That's how you know the big one. And the big one's going to cut deep, and it's going to move fast when it comes. So we'll have to see if this qualifies. And somehow I'm thinking this is not quite yet. We're not quite ready for the big one yet. This is more volatility, But I could be wrong. Maybe this is the big one. Anyway, listen, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.